Imagine this. You have called, you have emailed, you have texted, but nothing is happening. The customer that you sold it to on credit does not want to pay. To him, he won't pay, he can't pay. Then all of a sudden, you receive an email from KRA demanding that you pay for some taxes for income that you have never seen, you have never touched, and you have never received. At this point, the customer whom you paid to, whom you provided goods to, is silent on you. But KRA's voice is loud, very much awake, and demanding that you pay for money that you never touched. So what are bad debts? Bad debts. A bad debt is a debt that a company considers uncollectible after it has put reasonable efforts to collect it unsuccessfully. And therefore, it is allowed by law that if you did credit sales and you are eventually unable to claim or to get paid, then you should ask KRA to refund you the amount of money that you paid with respect to those sales to KRA. Remember, in Kenya, we use an accrual system. And what accrual system means is that you pay for taxes for income that your business has generated, not from the time that you have received the money, but from the time that you made that sale. And sales are two. You can make cash sales or you can make credit sales. And now we are talking about credit sales. The sales that you made and the customer is not receiving your calls, is not texting back, is not reacting to any of the demand notices that you sent to them. And therefore, you want KRA to consider and to look you with the eyes of mercy. We have two types of bad debts. One is general bad debt. A general bad debt is an estimate, usually in form of a percentage of the existing debts that a company considers or thinks that they will not be able to recover those debts. For example, if someone have not been receiving your calls, if someone has not been responding to your emails, decided to just ghost you, you think and you decide to write off that debt. And that's what we are referring as a bad debt in terms of general bad debt. Unfortunately, that general bad debt amount, it's only useful when you are computing for accounting profits, because accounting profit is the figure that is used by the management to understand the true and fair financial position of the company. Because the management knows very well, these people, they will not pay. Unfortunately, general bad debts are not considered as genuine expenses by KRA, because from KRA's perspective, you are yet to put effort, you are yet to confirm that it is 100% impossible for you to receive this money. So, number two, specific bad debts. Specific bad debts are those debts arising from credit sales that a company has now fully confirmed that they are unable to collect those monies. This could be maybe someone died, someone traveled abroad, or if it is a school, we are talking about someone has already transferred from your school and they have moved on, and therefore you are able to demonstrate that this person has no ability or intention of paying you. But you don't do that just by assuming. You have to prove to KRA that you did follow-ups, you did reminders, you did emails, and sometimes that you even took this person to court for KRA to actually consider any debt to be a specific debt that is deductible from future taxable profits. It is not easy when it comes to proving about specific debt, because for KRA to agree, there are these conditions that you have to meet. Number one is that you have to confirm that this debt had previously been declared by your business as income when you are filing for past taxes. Remember, the only time KRA will consider a debt as a specific debt is later on after a due process has been followed and it is 100% sure this creditor, this debtor who owes you money is not going to pay. So you have to prove to KRA that first of all, this amount of money I was expecting them 3 years ago. And 3 years ago, I did declare this income when I was filing for my taxes for that particular year. I have been pushing this particular customer, but they don't want to pay. So at that point, KRA will consider you, but not before number 2, that you show evidence that you have really struggled through emails, follow-ups, reminders, even court cases. Maybe the person is bankrupt, has been considered insolvent, or has gone back to their maker. Death certificates, KRA sometimes demand for them to be able to consider that a certain income that you are expecting from a certain person, it's not forthcoming. And number 3, you have to prove to KRA that the person who owes you money is genuinely unable or not willing to pay you. Most businesses make the mistake of claiming general bad debts as expenses when computing for taxable profit. And that's a very gross mistake. Now, when KRA finally realizes that that is what you did, what they will do is they will issue you with an additional tax assessment. And finally, they will disallow that expense that you had claimed with reference to general bad debts. They will add it back to taxable profits. Number 3, they will recompute taxes. And number 4, they will impose penalties, fines, and interest on you. So the difference of not knowing how to treat general expenses will cost your business so much. And now this is the catch, that if a debt that was previously confirmed and declared as specific debt is finally paid or recovered by the business, you should declare it as additional income in the year when you have received it, when you are filing for tax returns for that particular year. You remember the debt that I spoke about 3 years ago. We made a sale to a customer and we have been making follow-up, doing everything we can to ensure that we claim and demand them to pay us. And for 3 years, they have not done anything. So we applied to KRA and KRA actually confirmed and agreed to treat it as a taxable deduction. Then later on, kumbe, the person was in jail, or maybe the person all this time was in ICU, and he recovers, he resurfaces, and he comes back and pay the amount of money or the debt that we had previously written off as specific bad debt. That amount of money, that income, you are supposed to declare it. If you don't, and KRA catches up with you, they will issue you with an additional tax assessment. So to avoid all this drama, always do the right thing. Now, my call to action. Number 1, before you label or you consider a debt as bad, ask yourself the following questions. Number 1, is it specific or is it a general debt? Am I just assuming? Do I have evidence? Have I pushed? Or am I just assuming because my customer is not picking my calls, he's not responding to my emails, they close their offices, I'm assuming that they will not pay. And maybe this person in ICU is in jail, or they travel, or something beyond their control is making them not to pay you at that moment. So the first question, before you declare a debt as bad, ask yourself, is it specific or general? Number 2, have you put reasonable efforts to try and recover this amount of money? Have you written emails? Have you written demand letters? Have you sued this person? And number 3, you have to justify and indicate and ask yourself, is it true that this person is unwilling to pay? Or if KRA comes for me, if KRA questions me why I considered this debt as bad, am I able to defend myself? Do I have the proper documents to really defend myself before KRA by showing them all this documentation? If any of those answers is unclear, consider seeking professional help. And this was not from a medical doctor, from a tax consultant, so that they can guide you on how to navigate the complex tax landscape that we have here in Kenya. Always know that the cost of compliance is much lower than the cost of sudden surprise tax assessment notices and penalties. Always do the right thing to protect your business, to protect your profits, and more importantly, to protect your peace of mind. Review your bad debts today before KRA reviews them for you.